Now we're going to get into patterns because very many patterns are reliant on being able to draw accurate trend lines. So when I look at Tesla here on the hourly time frame, I can see we're very clearly in a higher low, higher high bullish uptrend. And when I look at it on the daily time frame, this is the hourly. So on the daily, I can see what stands out to me as multiple bull flags. And a bull flag occurs when you have a steep breakout and then normal healthy consolidation for a brief period of time before continuation to the upside. And you can see the consolidation for a couple days. So just looking on the daily time frame, I can recognize that that is the pattern, but I can zoom in on the hourly time frame and draw it a bit more accurately. So let's look at this potential bull flag. And a bull flag is also a channel. What makes it a bull flag is that it is occurring after a breakout has occurred. So here I am drawing my downtrend resistance line, and I'm making sure that no candlesticks are closing above this downtrend line. Candlesticks can break above it, that's fine, but it's touching multiple times, a bunch of times here. Another rejection, so I'm seeing the start and another one, second, third, fourth, and then before a bullish break. And you can actually get some confirmation a lot of times that your trend line is accurate if after a bull break, the price back tests and holds that level. And if I were to draw it exactly tight there, that's where it would be. And you can see, let me draw the whole bull flag first. We need that bottom channel as well. So on the channel, I'm hitting the low of the initial consolidation. I'm making sure no candlestick closes below it. And then we can see the price reject and then bounce and reject and bounce. All the while, normal healthy consolidation because it's following this big time breakout. And you can see once the breakout did occur, it back tested and held that previous resistance line as support. So not only do I get the confidence that we have a clear parallel channel, which represents the bull flag, a breakout, and then a pullback and a bounce off that level and an explosion to the upside, confirming. Another pattern I can draw back here, this looks like a bull flag, so I want to zoom in and get more detail on the hourly. I've got my downtrend resistance line to draw, hitting the upper body of that green candlestick, no candlesticks closing above it until the breakout. And then when I go and draw my downtrend line, I say, oh, this isn't parallel, so that's not a bull flag. And it took zooming in to be able to see that because we'll zoom out again and look on the daily. Daily looks like a bull flag. But here, I would draw my trend line right there to make sure no candlesticks are closing below. We had a lower wick bounce right off of it, a couple more touches, and then a breakout. This is a descending wedge pattern, and the difference is a parallel channel with an even space in between, as opposed to a tightening range that eventually leads to a clear break. And if we zoom out on the daily time frame, we don't get that detail. We get the multiple days of consolidation with lower wicks, bulls buying the dip, and then continuation. Here, very similar. 3 days of pullback, bulls buying the lower dips. And it takes zooming into the hourly time frame to see the difference in those two patterns. Another pattern we're going to look at is bear flags. This is gold on the 4-hour chart. So I just did those bull flags. And this is the opposite. It comes after a dump. It's a weak bounce attempt, and it leads to continuation to the downside. So I can see the stair-step pattern, lower highs and lower lows. So I draw, let's actually zoom in here a little bit more so we can see more clearly. I would hit the upper real bodies of these candlesticks, and then the lows of the red bodies, making sure no red bodies close below. And again, obviously all of these patterns are drawn in hindsight, as I wanted to get some good examples. But if this bounce were playing out, I would draw these channels and wait for the clear break. And same thing, we had a clear bear break, and then the bulls attempted to get back over, couldn't do it, and then a dump. And then we had another bear flag down here, parallel channel hitting the real bodies of the candlesticks, making sure no red candlesticks close below. And that bear break occurred right here on this candlestick and then led to a dump. So these patterns are all about drawing trend lines on different time frames, being able to recognize the price action, constricting ranges leading to downside. So recognizing patterns is obviously important, but being able to draw the trend lines that allow you to recognize the patterns just as equally as important. Let's look at a couple more here. We're going to look at a pennant and a triangle. Here we have the biotech sector on the weekly time frame. So as you can tell, these patterns are all different time frames all over the place. And on the weekly time frame, just visually, what stands out to me here is a tightening pattern where we have a clear higher low pattern. So I know that the bulls are in a nice uptrend. But I see that recently we also have a lower high pattern starting as well. So we're in an uptrend, but we're seeing some lower highs. And I would draw things to see a bit more clearly what's going on. So originally we had a nice strong uptrend line here, but that had broken. So wouldn't want to draw it from there just because the price had gotten below that level. So I would draw it a little bit closer. And we've got 1, 2, there's our third touch. So I'm hitting the real body down here on that big drop that broke that other trend line I just drew. We're hitting it again and then hitting it a third time. And I can see this clear lower high pattern. So again, I might be playing around. Draw as much as you want, and you can always adjust things. So if I were to draw a trend line here, that's a valid trend line. Hitting it multiple times. I'm hitting this lower high back here 2, 3 times. You can see the tightening range very clearly. But I can make it even tighter by using the more recent price action and using this recent high, highest price we saw on the bounce, using that real body of the candlestick and drawing it right there. So this is going to give me a breakout sooner. And let's just compare it to that other trend line again. We would have, again, a valid trend line, but it wouldn't give us we have all this space here. This one that I just drew is tighter and is going to give us a signal sooner. So we bounced off it 3 times. We rejected from it 3 times. This is a very important pattern that's going to break in the next 3 weeks. And that's the other thing that these trend lines and these patterns can give you. They can give you time frame. I know that this pattern is going to break in 3 weeks at the latest because there's really just not going to physically be space for the price to remain in this tight channel once these candlesticks begin forming for the next couple of weeks. So a break of this channel or this pennant here in one direction or the other, it's not a channel, it's a pennant with tightening ranges. It's going to give us short-term direction, whether to be looking bullish and up at these resistance levels. Again, the lower highs act as resistance, or if it's a bear break, the higher lows are going to act as support, those levels that we bounced off of. So this is a really nice pattern that we're all going to be watching here over the next month on XBI on the weekly time frame. Another pattern on NKE, Nike, the daily. Again, very clear higher low pattern. I can tell we are recently in an uptrend following a downtrend. So let's just, you can tell you could spend 10 hours drawing all these trend lines. Certainly plenty to be practicing with. There's a trend line here where we made a bull break. So again, no candlestick here is closing on the daily chart above my downtrend line. And you can see how quickly I was just able to throw that up there, visually speaking. And we made a bull break, but we're still dropping. Uh-oh, that trend line must be invalid. Look exactly where we bounced off of. The previous resistance acting as support, and then the trend changed. So now we can see an uptrend, but I see the price is struggling here. I'm looking at the closes of these candlesticks, and I'm seeing that these bulls are having a tough time closing over the $54 psychological resistance level. So I throw my resistance line right there. I can see 1, 2, a couple rejections just below it, 3, 4, 5 rejections from it, but I still see those higher low patterns. So we are in an uptrend, but we have a horizontal resistance line. And this is a ascending triangle pattern. And I would draw a trend line here and say, nope, that's way too tight. Can't start it from that point. So play around with your starting and end points. I would start it from this candlestick, and I would put it right there, making sure Friday didn't close below it. We're touching it 1, 2, 3, 4 times. Range is getting tighter, same thing. I know there's going to be a break sometime within the next 5 to 6 trading days. If we close below the uptrend line, we're going to look at all these previous higher lows as support levels. And if we close above $54, it's going to be a clear bull break. So this is an ascending triangle pattern going off of the uptrend line and a horizontal resistance line. So you can find these patterns and these trend lines all over the place.